Ooh, check one, two, check one, two. Can you hear me out there? Hello, hello. Hi there. Hey, everybody. Welcome back. Welcome back. I hope you had a good weekend. It's Ed Ponsi, your FX educator, here on behalf of FX Street. Oh, my goodness. Things are really moving out there. And our Euro trade, I think we're up 440 pips now. We're up 440 pips on the euro. We'll get to that in just a minute. And but I want to remind you, first of all, this is your room, so please do feel free to ask questions. I'm more than happy to try to answer any questions that you might have. I've got the S&P futures up there right now. I've got my eye on this previous high. See that H? I've got my eye firmly over there, and that's exactly where we are now. So the channel itself is starting to, I guess, become questionable. It's become a grind. We're still grinding higher in stocks. We've pulled back a little bit of support, but we're under that trend line and we're right at that key level. So I just want you to be aware of that we're sort of at a very important juncture on the S&P futures. And of course, that can control all the individual stocks, and then of course the markets and are all current related, right? Stocks and Forex are related, futures and Forex are related. So there's a lot going on here. Let's go right to the euro, because look at that. Our objective, the third target. Now the first two targets are here in black. The entries here in green, 113. If you missed it, there were two entries actually. The average entry is 113. We hit the first target, 114.40. We hit the second target, 115.75, and we've been moving the stop up. You can see that we last moved the stop to 114.75. Now look, gang, we always want to measure risk and reward, at all times. Now the high today so far is 45. We're currently at 43. So we're currently 23 pips away from our final target. The blue here is actually, we're 23 pips away from the target. And that's our last and final target. And how far are we from the stop? Well, the stop is at 114.75. So the stop is 265 pips away. So we're risking 265 to make 23 pips. Does that make any sense at all? The answer is no. So I'm definitely going to bring that stop up. If I only have 23 risk, now you'll notice I'm not going to make it 1-to-1, 23 risk versus 23 reward. What I do want to do is go shorter term. The only thing I can see on the chart right now that I would want my stop to be under is 117. But even that isn't such a big deal because 117 has just been hit. So lots of orders have been cleaned up already. And that means that it's unlikely to really provide much support on the way back down. Unless some time passes, the more time that passes between touches of 117, then the better the level should work. But I only have 25 to go. Let's go to the 240 chart, the 4-hour. Right? And even on the 4-hour, it's just gone so far, so fast. But you see this little area right here? It's just under 117, and there's just a little bit of support there. And I'm going to go to a 60, a 1-hour chart to look at it again. And you can see it a little bit better here on the 1-hour chart. There's a little bit of support here. And that support is right around 116.85. Now, that might not be the world's greatest place to put the stop right now, but I'm going to tell you something. It's better than having the stop as far away as it is now. So let's go back to the daily, and we're going to bring it up. What's the low point? I want to ask myself, what's the low point of that candle? Is 116.82? No problem. I can bring my stop up to, let's say, 116.75, just under that low. So let's do that. We're currently at 114.75. We're bringing it up to 116.75 because we want to be underneath that hourly support. And so now, not only have we hit two targets, but our worst case, you always want to calculate your worst case scenario. And our worst case scenario right now is if the stop gets hit, we make 375 pips. Now, there's really no other levels. I'm going to take you back to the 60-minute. There's nothing else on this chart that I can use other than putting the stop under that black line, because this thing is a rocket and it's not creating any levels. So when prices move this quickly, they don't really create levels. And that means if they move up quickly, they can move down quickly because there's nothing to stop it. There's no support. Now, so the current, let's go back and now let's remeasure, because before we said we had 23 pips to gain and 265 to lose. I've done the best I can with the stop. There are 20 pips more to gain, and I could lose if it drops from 117.45, that's the current price. If it drops to my stop at 116.75, how much could I lose? I could make 20. There's 20 more pips to the target. How much could I lose? 25 plus 45. I could lose 70 pips. I'm risking, even though I've moved the stop up by 200 pips, I'm still risking 70 to make 20. And that's not something I'm keen to do. Right? So the stop either has to be higher or we have to get out of the trade. We're currently 19 pips away from the target, 20 pips away from the target. Now listen, folks. If we can get within 20 pips of that target, 19 pips of that target, and we don't make it, how are you going to feel about that? Are you going to wish you could turn back the hands of time and get out now? With your 446 pip profit? I'm going to suggest moot point now, says Peter. Yeah, I'm going to suggest that why would we risk anything just to get that last 19, 20 pips? You know, who cares about those last 20 pips? If you can walk away with 445, are you going to say, darn it, I didn't get 465? I'm going to say, let's take it out. Let's just take it out of there. Give me 1 second. I got to go on my iPad over here. We're 18 pips away from the ultimate target. Why hold out any longer, right? And out of there. Okay, no longer in. So, okay. We're out at approximately 117.45. It's a 445 pip gain. Now, if you hang in there, you might make it to 65, but I just don't feel that it's worth risking. You only have about 18 more pips of upside. And how much are you risking to try to get those last 18 pips? Another way to look at it is this. If your target was 465 and you took 445, you got more than 95% of a huge target. And I'm going to say that's good. I'm going to say that's good. And you know, it's never this easy, gang. I mean, it's nice when you see all those green candles lined up for you, especially that huge one on the end. It's nice, but we don't ever expect it to happen that way. We don't ever, you know, I don't expect to hit all three targets most of the time, you know, and so I just don't want to create the wrong impression. There are so many people, you know, I mean, yeah, we made 445 pips on this trade. I'm on LinkedIn, right? And this guy connects with me on LinkedIn, and he's claiming to be, you know, chief such and such officer at such and such a Forex broker. And he sends me a message. He starts sending me messages about an opportunity. And I'm like, yeah, okay, whatever. What is it? What do you got in mind? And he says, eventually he gets to his whole point. He says, well, I'm a Forex trader and I'm currently making 50 to 100% per month. And I was wondering if you would want me to trade your account. He's asking me, you know, he wants to trade my account. And he says he's making 50 to 100% a month. Now, just consider the absurdity of that. Right? If you're making 50 to 100% a month consistently, you'd be the richest person on earth within a few years. So it concerns me that anyone would ever fall for that type of nonsense. But you know, I'm not going to come on here and shout and say we made 445 pips because first of all, it's a group effort. We get lots of input from people in the room like Carlos and Peter. And so it's all group effort. Whoa, there goes. Did you see it just jumped to 55? There it goes. It just jumped to 58. That was weird. It just literally just jumped about 10 pips. Did it gap? Let me go take a peek. It just shut. That's a 1 minute chart now. It's just taken off. Do you wish him a Merry Christmas? You know, I just, you know, I was tempted to say, well, I'm making, you know, you're only making 50 to 100% a month, but I'm expecting that, you know, 50 to 100% per week. But instead, I just said no, thank you, and that was, and I let it be at that. Um, so anyway, um, so if you did hang in there, you might end up getting those last 20 pips or so that I missed out on. It's now 3 pips away from the target. This is sick. 2 pips. Nothing's going to stop it. 1 pip. That's wild. It just jumped about 20 pips in the last minute and a half. And it's like it looks like panic buying to me. And of course it's not just the euro, right? There's a whole lot going on here. Look at this. How high did it get? I'm showing the high of 64.5. So it came within a half a pip of the target. Maybe it was expected gains determined by backtesting a demo account. Yeah, but if that's the case, why do you go and contact me and say, I am a Forex trader who makes X amount of money? You know, so first of all, if you make that much money, why are you contacting me? And second of all, why are you a connection of mine on LinkedIn and you're asking if you can trade my account? You have no, I mean, I'm not saying, do you know who I am? But I am going to say, do you have no idea at all? Did you look at my profile? um, anyway, He doesn't know you worked for Goldman Sachs, bro. I wish I worked for Goldman Sachs. And I'll tell you what, I do know an ex-Goldman Sachs. And I'm going to tell you a funny story too. There's a person I know who worked for Goldman Sachs. And this individual contacts me a lot about how do I draw a trend line and things of that nature. Look at that. It came within one pip of the target. I'm glad I got out. And this surprised me, because I figured, well, you worked for Goldman Sachs. You must know how to, how to draw it. You were a vice president for Goldman Sachs. So first of all, I think vice president is basically an entry-level position at Goldman Sachs. Like if you're still honestly, you get hired, I think that's a title that you get. And if you're still a vice president after 5 years, you're kind of looked down upon in that world, right? But so this individual is asking me about trend lines and things of that nature a lot. And she's told me, well, I was in M&A. I was in the mergers and acquisition. I didn't do what you do at all. So really what she did and what I do are completely different. She doesn't know anything about trend lines and things like that. She knows about mergers and acquisition. She knows if it makes sense for company A, wants to grow, then she can go and find out what company would be good to buy, right? Would be good to acquire. So it's kind of strange, right? And let's go to the euro British pound. This is also starting to go a little bit, but I would say we're still a good ways away from our targets here. I mean, we've already hit the first target. And we've basically removed the risk from the trade. My stop is 5 pips below my entry. If this keeps running toward 92, I'm going to have to consider, bringing that up. Because how far? I'm 65 pips away from 92 even. But I'm 90 pips away from my stop. I'm still going to give it a little bit of room. I'm not in a big hurry to move that one. Aussie, New Zealand. We caught the first entry if you missed it. And it's a good thing that we used the philosophy that we didn't want to short it on the way up. If we had shorted it on the way up, I think we would have been taken out. Actually, the high was 54, so no, we would not have been taken out if we had shorted it on the way up. But that's not how we roll. We shorted it on the way down. So we're up 13 pips on this one. No big deal right now. And the way this trade plays, we have our second entry at 105.60. So we're basically looking at this thing as one big top. It's a sloppy top, right? But it's basically looking at it as one big top. And there, I think if you look at it from that angle, it makes more sense, right? And you can kind of see what the whole point is. But I love this multiple. You see, the typical technical analysis says you have to wait for it to break down and then you short it, which we're doing, right? We're going to add the second half of the position if that happens. But on the other hand, what's wrong with shorting a little bit up here and a little bit more down there? Okay. Durable goods orders are coming up. And thanks for the heads up on that. That's from Peter. I think we're looking for 7%, or was it 3.5%? Just taking a quick peek here. That's coming in less than 15 minutes. Durable goods, looking for a 7% increase. The core means you take out autos and airplanes, and we're looking for 3.5%. yeah, we're going to get to the DXY next, because obviously if the euro keeps going higher, the DXY keeps going lower. Any thoughts on swap chewing up profits on long-term trades? Yeah, I can remember when I think you almost have to look at different brokers because they have very different policies. And what the question deals with is from Peter, he's talking about the interest rates that are attached to your trade by the broker. And, once upon a time, you could collect interest on Forex trades, but now all the interest rates are zero or approximately zero. And it seems like no matter what you do, you pay. And the longer you're in, yeah, the more you're going to pay. And so, we paid, I don't even want to calculate the interest, but yeah, we definitely paid some interest on Euro USD. So the broker is finding, is using that as a way to get paid. And I think that it's very much overlooked. And I'm glad you brought it up, Peter, because the truth is we haven't really talked about it lately at all. And different brokers have very different policies, first of all, when it comes to swap rates. In other words, how much interest they're going to charge you for being in that trade. The second point I'd like to make is this: no matter which broker you are with, you will get a better rate if you have a big account and you do a little bit of negotiating. And they place so much value on large accounts at Forex brokers, and you really need to use this because this game is hard to win as it is. Our recent activity aside, it's a hard enough game to win as it is without the broker doing little things to stack the odds against you. And we talked about trying to get the tightest spread possible. That's usually done by something called core spreads, or most brokers now offer some version of, Oanda calls it core spreads. I don't know what the other brokers call it, but you pay a small fee and your spread gets tighter. And I love this. But not too many people are paying attention to the swap rates. And I think one thing that you could do, right, without being terribly specific about brokers, you could open up demo accounts on, let's say, a half dozen different Forex brokers and place the same exact trade and just let them run in the demo accounts and measure the difference in the swap rates. Because some of them are way out of control. And it's something that's not super obvious, so I guess they feel like they can get away with it. So I would suggest this: if you're considering, why not open up a bunch of different demo accounts from all from different brokers, place the same trade in each account, and just watch what happens on the swaps. And if you have a live account with one of them, with one of those brokers, then maybe you call them up and say, hey, I couldn't help notice that your swap rate is not as advantageous as broker A or broker C or broker X. And maybe you have a little discussion with them about that. And obviously they're not going to cut you any slack if you have $1,000 in an account or $500 in an account or $100 in an account. But if you're throwing around, I'm going to say 50,000 or more, or maybe even 25,000 or more, then to them you're a bigger account because there are so many small accounts at Forex brokers. So I would suggest that you compare the swaps, which can be difficult if you're just trying to get the facts by making phone calls or checking websites. I think the best way to check the swaps is to open up demo accounts and place the same trade in each account, as I said. So Peter says he lost $4.66 on the swap. Yeah, I mean, I can't remember the last time I collected interest on a trade. And I was trading currencies back when the interest rate in New Zealand was 8.75 versus 0 in Japan. And you would just, if you were long Kiwi versus yen, they were just buying you lunch every day. You know, they'd buy you lunch every day to go long Kiwi yen. You know, I miss those days. And we haven't had interest rates in this world since 2008. We haven't had true interest rates. And now it's just a question of where do you go from, where do you take it from here? But I think the Forex brokers need to be accountable to their clients. And I think most of the clients are unaware of the things we're discussing right now. Peter says that's pips per day. Well, that's a pretty big bite. You know, so I would measure the size of the trade position versus the size they took out. Now, some brokers actually have a very interesting rule where they charge all the swap fees on Wednesday at 5 p.m. New York time. And I don't know which ones are currently. I know Oanda used to be prorated based on how long you were in the trade. I'm not sure if they're doing that anymore. Some of them are prorated based on how long you're in the trade. Some of them just charge it all on Wednesday, which is interesting because should that play into your strategy? If there's a, you know, like a 3-day charge on Wednesday for the weekend, Saturday, Sunday, and Monday, but everything gets pushed back 2 days because of settlement, and then they whack you on Wednesday. So if it's Wednesday and you know you're gonna get whacked in a couple of hours, does that play into your strategy? I think you have to be able to do the math on that one. The math on that one's going to be pretty complicated. But I think for some people, it's more of an emotional decision to say, I don't want to be charged. And, you know, of course, we don't want to deal in emotions if we can avoid it. Pound dollar, says Carlos, joined the beautiful group of charts, is now aiming at 130. Let's take a look at cable. Of course, this one didn't work out. You can see very clearly for us. But yeah, that's a breakout. And when I say it didn't work out, you know, that's just the way it goes sometimes. But yeah, that's now an official breakout. And I think if we look at it, let me just clear the chart. Having trouble clicking the right buttons. Just waiting for that first cup of coffee to kick in. It's going to be 98 degrees Fahrenheit here today. But the pool is ready. This looks like this looks a little bit like the euro, doesn't it? The euro had that big, beautiful cup and handle. This one's like smaller. But there's a little cup and handle here. I don't know how I missed it, but I did. It's not really a great cup and handle, but it sure looks like it worked. And so that's off into the wild blue yonder. Now the pound hasn't been that high since March. And so it's all out dollar destruction going on out there. And I think something like this, when it breaks like this, I start thinking about moving averages. Like, is that going to now be the support And honestly, doesn't look like they're too worried about Brexit right at the moment. I mean, when you look at this chart, it has nothing to do with Brexit. It's all about the dollar. If you're daring, maybe you could gain interest by opening Tuesday and close Wednesday open. You know, I've seen people do things like that where they opened on a Tuesday or they closed on a Tuesday. They closed on a Wednesday before a big interest payment hit, and then they reopened it later. But remember, you got to pay the spread and the commission when you do that, so you got to weigh it. All right, durable goods are hitting right now as we speak. Let's see if we got any results on the durable good. Looking for 7.0. And if you take away airplanes and cars, you're looking for 3.5. I don't have it yet. Well, here it comes. Very close to expectations. Durable goods was 7.3. So that's 0.3 above expectations. You take out cars and airplanes, and you're 0.2 below expectations. 3.3, looking for 3.5. All right, that's going to do it for this segment. So let's get ready. Let's move on. When we come back, we haven't even looked at gold and silver and all that stuff. So why don't we do that when we come back in 29 minutes? Until then, it's Ed Ponsi, your FX educator. Thanks for listening. See you back here in less than a half hour.